Hello dear traders, here is a fresh review of the North American session. In this video you will find out why US stock indexes are growing and what can support the US dollar. Besides, you will get to know an update on the US labor market and other news. The US stock market has been growing for the third day in a row. On Tuesday, the Dow Jones and the Nasdaq closed with a 0.8% gain each. Futures on the S&P 500 rose 0.7% yesterday and added another 0.5% today. What catalyst is drifting the stock market upwards? Investors are aware of the looming rate hike and the Fed's plans to scale back its balance sheet. There are other factors to influence market sentiment. The US is reporting lower Omicron rates day by day in contrast with a flood of new cases in Europe. The ISM manufacturing PMI slipped higher than expected to 57.6 in January from 58.8 in the previous months. Besides, an upbeat quarterly report by Alphabet adds up to investors' optimism. The company's sales zoomed up by 32% to $75 billion in the previous quarter. Like earlier with Apple, the financial report of Google's parent company is a powerful market catalyst. Meanwhile, the S&P 500 climbed to 4,579, moving to the upper border of the corridor between 4,510 and 4,560 points. The US dollar has not been able to maintain bullish momentum and settle at highs. Its index has shed a painful 1.5% for the last 2 days. Perhaps the firm euro set the stage for the US dollar's weakness. On Thursday, the ECB is holding a policy meeting. Probably the central bank will drop a hint about raising interest rates in its statement. Such prospects assure speculators to push the euro up, so the euro-dollar pair reversed upwards. Currently, the US dollar is rather weak. In the meantime, its index is trading at nearly 96.81. The expected corridor is between 95.90 and 96.50. Amid uncertain prospects of the greenback, the USD CAD pair is trading quietly within the corridor between 1.26 and 1.28. The currency pair is likely to trade sideways for a while. It will exit the flat market because meaningful events are needed for either oil or the US dollar that remains at nearly multi-year highs. Currently, the USD CAD pair is trading at about 1.2651, drifting lower. Having plummeted below a one-month low of $33,000, Bitcoin seems to be trading firmly higher. The price even jumped above the level of $38,000. Later on, the crypto declined below 36,000. Today, the digital token is trading within the corridor between 38,815 and 38,262. Though Bitcoin has gained the overall bullish momentum, there is a high chance of a steep drop. Currently, the crypto is trading at about 38,703, poised to move higher above resistance at $39,000. Some analysts expect Bitcoin to advance as high as $40,000 or $44,000. On the other hand, the price could retrace downwards to the area of $30,000 to $32,000 per token. The US labor market remains healthy. Wages growth and a number of vacancies were at multi-year highs on December. Nevertheless, market participants spotted signs that the market cooled down in January. The number of vacancies edged up from 10.8 million to 10.9 million. The number of layoffs fell to 4.3 million from 4.5. The US Labor Department warned the market about tepid employment data for January due to the coronavirus resurgence. The ADP payroll processor released its employment report today. The US private sector unexpectedly lost 301,000 jobs in January, from the first contraction since December 2020 and the largest one since April 2020. Indeed, the spread of the Omicron variant again affected the labor market. The market had projected to 185,000 new jobs. To sum up, ADP employment report was very downbeat. The Wall Street is ready for a new bullish wave. We could see a correctional decline in the nearest days. Keep close tabs on US trading floors on InstaForex TV channel. Our experts are always pleased to reply to all your questions. And that's all for today. See you tomorrow.